One name in the tech fallout, Facebook. It is on track for its worst month in more than 5 years. The stock continues to get nailed as reports of an internal, quote-unquote, war at the company dominate the headlines. Julia Borson's got more on that story. Julia.
Melissa, Facebook losing nearly 6% today. After this weekend, the Wall Street Journal reported on CEO Mark Zuckerberg adopting a more aggressive style, saying with Facebook's at war, he's changing his approach. Now, today, questions shift to how Facebook's issues will impact its user base and its ad dollars. Brian Weiser at Pivotal reiterating a sell rating on the stock and warning, quote, advertiser concerns about morality at Facebook are real. Post last week's New York Times articles on the company, we don't see immediate financial impact, but other risks to the business are elevated on many fronts. But Facebook tells me that in the wake of last week's New York Times expose, since its third quarter earnings report, quote, we haven't seen any meaningful trends in advertisers pulling spend. But Facebook is still struggling with a range of challenges, including stagnating user growth. Daily active users in the U.S. and Canada were flat between the second and third quarter, while in Europe, daily users declined by 1 million. The company's stock has plummeted some 39% since its Q2 earnings report. There's a growing expectation of federal privacy regulation, as well as the potential for antitrust scrutiny. And this all comes amid growing criticism of Zuckerberg and COO Sheryl Sandberg. And that slumping stock price has brought the value of Zuckerberg's holdings down by over $8 billion. As for whether we'll see any dramatic changes at the top of the company, that's entirely up to Zuckerberg, who controls the majority of voting shares. Melissa, back over to you.
All right, Julia, thank you. Julia Borson in Los Angeles for us. If you thought Facebook had an engagement problem, which it does, core Facebook at least, and you thought it was able to fix the problem, maybe that fix is even harder to do if it's got handcuffs on it in terms of regulation.
And the amount of money and the growth in terms of paying people that are there for security reasons and everything else. And this stock really started that move to the downside on the announcement of how much money they were going to have to start
down
spending.
40% from its all-time high.
Yeah, and that was near around the same time. I remember we were going through the earnings report, and then suddenly we see these huge numbers about what they're going to have to spend to grow. Now, we knew that they were going to be spending, but I don't think any of us on the desk thought it was going to be that kind of numbers. And when we saw that, that's when the slide really began to accelerate.
I think they told us in that second quarter number, not only that they didn't know how to price their business, that they didn't actually know the cost of security,
right,
but that effectively that they were not a community of sharing. I repeat this, the perception of Facebook's business has changed so dramatically. And so therefore, the fix on Facebook, if it's a community of sharing, is just a few programmers, you actually do a couple things around the edges. No, this is actually fundamental. This actually tells you, they told you growth was falling down too, not just the cost out of their business. This is corporate governance. Okay. That's what it is.
And you've been all over it, the CNBC.com op-eds. It's been really a treat
a
for all of us.
Them,
you go to them, Tim Seymour.
Like 3 of them.
There's 3 of them
but
now.
I want to make one really important point here.
It's an oeuvre.
If we all agree on everything that you guys just said about Facebook, as an investor, you'd be crazy not to extrapolate to what Google is going to have to deal with in 2019. You're just good. I mean, it just makes absolutely no sense to consider the fact that they will not have to take some similar steps.
They're not the same company, though, Dan. I actually disagree with that. I think some of the corporate governance issues at Facebook are ones that really are a lack of oversight, a lack of visibility.
Split screen moment.
Well, I mean, I think it's actually a case where these guys really weren't able to articulate the risks around their company. That it's very hard for me to understand.
Tim, there wasn't an investor other than you online at CNBC.com in July, late July, when Facebook was trading at $217 before that report, who really thought that this was something that they're going to have to deal with in 2019. It was going to be the sort of hit to earnings that made earnings be flat year over year. After at one point, we're expected to be up 20% in 2019.
You done? Okay. Why with 30% growth in the top line for the last 3 years, in fact, arguably 35, was this stock trading at 16, 17, 18 times going into that number? You know why? The market was telling you. People were not rewarding this management team with a premium. The ultimate value for a company is the multiple you want to put on it. And we were not willing, even before the second quarter. Facebook underperformed the triple Qs going into that number, let alone after it. I would argue that this company has been broken for a long time and that the market would not reward it, and the market was right.
Is a company capable of fixing itself with the same 2 people in charge?
Well, I mean, it's interesting because I think Pete commented on this earlier today, but when you have Mark Benioff making comments to the extent that he did about Facebook, I mean, that's not necessarily a very encouraging thing for the share price. Now, I never thought it was get down to 130 or so. And at a certain point, you have to look at it and say, they will figure it out. But to answer your question, does there need to be a change at the top in terms of Mr. Zuckerberg? I don't know. And Sheryl Sandberg, I don't know the answer to that, but we're closer to that than we've been in a long time.
I should say the analyst community is so far off sides on this stock, too. If you think about where the overweights are on this company, there's so much that needs to come down, and they will come down. They'll come down, after the next 20% move. Sorry for the sarcasm, but the bottom line is these guys were banging the table at 215, 220 on the stock and weren't picking up on any of this. And now they're picking up on it. Strange.